A very good morning, guys. Gift Nifty at 23,914, up 30 points above the gamma flip level of 23,850. We just crossed into positive gamma territory. Remember that. Yesterday, 41,000 contracts. That's how many FIIs covered in last 2 days, but biggest short covering that we saw in the last 10 days. Then yesterday they stopped and added back 318 contracts. The covering is on the pause. But here's what nobody is looking at. Client short puts exploded and went to 4,66,000 in a single day. That's a huge bullish exposure from the crowd. And after hours, TCS dropped a 29% quarter over quarter profit beat. So that's a good positive news. Gift Nifty trading at 23,915 means we open above the gamma flip zone. Positive gamma territory is there. We would see some damped moves, some grinding happening, but with TCS as the catalyst, can bulls pulls through the 24,000 wall strike is what we are going to see. So let's break it down. This is India's daily pre-market edge, real data, real positioning, real levels. I'm Tanmay Gurtaguti, season 2, episode 17. Let's go. So let's look at some global and commodity levels. US closed in green. Nasdaq was up by 0.82%. S&P was up by 0.62%. So tech led the rally. Risk was present on close. Europe was weak yesterday and DAX fell by 1.31%. CAC was down 0.6%. But watch for the bounce today with Asia flipping green completely. And yes, Asia is green this morning. Nikkei is up by 1.52%. Hang Seng is up by 1%. Kospi is up by 1.9%. Taiwan is also up by 1%. Shanghai is up by 1%. Across the board, we are seeing this rally. So let's look at crude and commodities level as well. So crude, here's what changed. Brent had a pullback to $96.71. MCX crude also closed at 89.55, down from 94.36. That's positive for India. Remember, every $10 drop saves roughly 43,000 crores. Gold at $47.45, slight pullback from 47.83 yesterday. MCX gold around 1,53,500, still elevated but not surging that much. Dollar index is still weak and rupee is quite steady at 92.66. So let's look at pro FII and client positioning, because that is where the edge is present. Let's go participant by participant. Pros futures flat, almost 727 contracts, that's nearly zero. But look at their options book. Long puts at 1,02,000 contracts, long calls at 25,500 contracts. They are hedged on both sides, not committing to a single direction. When pros goes neutral, they are waiting for a catalyst in the market. FIs on the other hand, futures, they are standing at 2,27,000 short. They added just 318 contracts after covering almost 41,000 contracts in the last 2 days. But here's what the headline misses. Look at their options book. Call writing jumped to 2,25,000 contracts from 1,94,000 that we saw day before yesterday. Put buying also increased from 2,88,000 to 3,31,000. The futures say flat. The option says they are re-hedging bearish stance. This is what I mean when I say options positioning tells you more than futures. The headline is a lie. The options are the real truth. And client, what the crowd is doing, futures long at 1,62,000. But the real story, puts exploded. So from short of 2,92,000 to currently they are holding 4,65,000 short puts in one day. So that's 1,73,000 short puts got added, and plus they have long calls of almost 1,98,000. This is maximum bullish exposure we have seen, but every put they have sold is a bet that the market doesn't fall. If the market drops below 23,500, those 4,66,000 lakh short puts are going to become a huge problem. So FIs have stopped the covering and still are short almost 2,27,000 short futures. Now on the cash side, yesterday FIs sold just 1,700 crores. That was the smallest we have seen in the last 10 days. Also DIs bought just 956 crores, also lowest what we have seen. From a quick learning point, guys, when you see FIs futures OI barely change like yesterday, plus 318 contracts that we saw, the instinct says nothing happened, but that's wrong. What actually happened is they shifted from futures to option, sold more calls, bought more puts. The notional exposure through options increased even though futures looked flat. This is called an options overlay. Same directional bet, different instrument. It's harder to track, which is exactly why they do it. When covering pauses and option activity spikes, that's the signal, not the futures number one everyone is quoting. Now let's look at some options level and key Nifty levels as well. So gamma flip zone is 23,850. Nifty closed yesterday at 23,775, below that gamma flip zone, but GIFT Nifty is trading above 23,900, which puts us in a positive gamma zone. So we could see a damped moves happening, mean reversion happening, a grinding happening around that 24,000 level. That changes the whole setup from yesterday. So call wall is present at 24,000. That's your resistance, where almost 77 lakh call OI is present. That's the ceiling. Put support is present at 23,500 with max negative GEX exposure present around there at 1456. Okay, so 13th April, that is Monday, straddle is trading at 391, giving us an implied range of 33,400 on the downside to 24,200 on the upside. IV signal is in buy. Options are cheap after 2 days of post ceasefire. Expect an initial rise in IV today. Buy into that early, but selling into the weekend is the play if it spikes. Weekend theta plus taking light positions is the play what I'm thinking of. Thursday's low was 23,683. That's first support test. Below that 23,500 becomes the magnet. About 23,850 we enter into a positive gamma zone, below which we see large amplified moves like we saw yesterday. The open above 23,850 is the key from yesterday's setup. Now let's look at some sectors and screener what it is telling. So yesterday was a bank sell-off. Private banks were negative 1.75%. Bank Nifty was down by 1.5%. All 14 stocks close in red. That's 14 on 14. PSU banks was minus 1.27%. But look what's working. Defense was up by 1.56%. Capital markets was up by 1.54%. Metals were up by 1.25%. Energy was up by 0.82%. IT was up by 22 bips. Pharma was also up by 66 bips. So yesterday's was a bank sell-off, not a market sell-off. Broader market actually held. Mid cap was flat. Small cap was barely red. So if you were short banks, you made money yesterday. If you were long metals, you made money yesterday. The index fell 222 points, but most sectors closed green. And then yesterday TCS came with a fantastic result. So my read for today is consolidation, buy on dips continues, wall crush is expected further with initial rise in IV that we could see in the morning. GIFT Nifty at 23,914 puts us in the gamma flip zone. Yesterday we were in a negative gamma, today we are in a positive gamma. That means market wants to grind, not crash. So FII's covering has paused, client is maxed out bullish. So keep a watch on mean reverting positions that could affect today's move. So the rupee case Nifty strategy holds 10 stock equal weighted portfolio, which holds Sriram Transport Finance, a clear winner, Coal India, Hindalco, NTPC, SBI, Power Grid, Tata Steel, Sun Pharma, ONGC and Dr. Reddy. Yesterday Nifty was down by 0.96%, whereas rupee case Nifty was up by 0.4%. That's the alpha. Next rebalance happens on Monday, that is 13th April. Track it live on rupeecase.com. That's your edge for today, guys. If this added any value, share it with one trader friend who needs it right now. Subscribe on Apple Podcasts, Spotify, or stream it live on rupeecase.com. Search for the Tanmay Edge. I am building rupeecase, India's first investing terminal. Link is present in the show notes, guys. The data doesn't lie, narratives do. You just got earlier. See you all once again on Monday 13th.